Is life insurance a good investment? So we're going to step away from the death benefit portion of the life insurance and just look at the actual cash value that's accumulating in the policy. So you're doing this life insurance primarily because you're trying to accumulate cash for yourself, not necessarily so much for the death benefit. But before we get there, would you say that bonds are a bad investment? It's not, right? Depends. If you're looking for stable income, you're a little bit more conservative, you don't want to see too much fluctuation on your portfolio balance, then bonds would probably be the best bet, right? Whether it's municipal bonds, corporate bonds, treasury bonds, doesn't matter. But you wouldn't compare the returns that you're getting from bonds with a stock portfolio. Just doesn't make any sense. They're not comparable. It's not an apples to apples comparison, which is quite often what is done when they're looking at life insurance. They're looking at a traditional whole life product, which is not market correlated at all, and comparing that with a stock portfolio. It's not apples to apples. If you want to look at market driven products with life insurance, then you probably need to go into a variable life insurance product, which is market correlated. The premiums that you're paying in, well, part of it is paying for life insurance, part of it is also going into mutual funds. So it's being invested on your behalf. And based on your risk tolerance, you are able to go into more aggressive portfolios and have market returns similar to a stock portfolio. Now, the big thing that ultimately would allow for your life insurance to be a good investment from a cash value standpoint is not necessarily only the returns, because you'd be getting comparable returns within the life insurance, but it's more from the standpoint of the tax advantage. So your mutual funds that is not in your mutual funds in a brokerage account, you're paying taxes as your portfolio turns over. So when they sell on your positions, you get a 1099 where you pay the taxes on your income. So based on your individual tax bracket, you're paying taxes on that return that you got in that year. Whereas that same portfolio placed in a life insurance product, you're not paying any taxes. So your money is growing tax deferred. And ultimately, when you start to pull the money out, it's tax free, as long as the product is structured properly. So it is a good investment, especially if you're looking for tax-free income and tax-deferred growth.